We have a good high of day forming here in the London session. So we have a 2 a.m. reversal, a 6 a.m. continuation, right? And now we're looking to see if we can get this 10 a.m. candle to offer a internal to external retracement into expansion. So we're looking to trade a 1 hour realigned reversal, right, in this new 4-hour candle or at the close of this current 4-hour candle. Internal to external, right? Pretty simple. We want to see an SMT. Yeah. Jacob's got it, right? We want to see an SMT form inside that internal range of liquidity that we have above us, something like that, right? I'm also not opposed to trading, right? The retracement, potentially off low of day, back into the range. Again, remember, it's Wednesday. We have Trump speaking at 4 p.m. and we have NFP on Friday. So my anticipation for the whole week is the same as it's been since Monday, is a range. I don't expect us to really deviate much from the range. I expect us to generate a range and then on Friday to expand in some meaningful capacity. So the opportunity zone exists at the extremes, previous day high and previous day low. So we either trade towards these or trade away from them. Right, low probability days for the next couple of days, especially with Trump speaking this afternoon. The best trade today was 6 a.m. obviously, right? Because you can see we had that 4-hour candle reverse in the London session. So right here at 2 a.m., we formed a really good high of day, right? And then you can see we had a reversal into a consolidation for the most part at the 2 a.m. candle. We didn't really expand to any objectives. Then 6 a.m. priced in a very small opposing run in this wick. You can look and let's see what happens inside of this wick. You're going to see this very small opposing run inside of this wick is just into a 15-minute key level. Right, you'll see. That wick right at 6 a.m. is into what? This order block, this breaker, and then we get an expansion of that next 4-hour candle, right? So like 6 a.m. is the ideal swing point continuation. So 2 a.m. forms a nice swing point, and then 6 a.m. continues because this 2 a.m. candle is a reversal consolidation as opposed to a reversal expansion, right? Reversal expansion would look like this. And this is what 2 a.m. did. So that 6 a.m. expanded, right? That's the new hourly open. That's a new open. This is the old. These are two opening prices. This is the reversal. This is the accumulation. And then this is the expansion, as opposed to sometimes where we get a C2 reversal, where this is a, right, opening price. This is the reversal, and then this is the expansion that happens in the same candle. So it's a small nuance, but it's important. So 6 a.m. really presented the ideal trade for the day. I recognize that, but I'm also just not trading at 6 a.m. Right? Yeah. It would have been nice. It would have been nice at in the morning, like very early morning. I mean, I'm gonna wait until we get some sort of retracement, or I'm gonna trade off of these lows, like off of these previous day lows. Because the reality is that like this is all low resistance liquidity too, especially retracing large imbalances of the market, and the imbalances look like this. This is all inefficient delivery. This is all largely inefficient. Right, so anything that trades to reprice this is also low resistance liquidity. So you can either trade from internal to external, or I can trade from external back into internal because its entire range is inefficient. And you can see that with higher time frame inefficiencies. But I won't short the market at the range low. I won't be involving myself in this distribution right here, right? Unless I get a retracement. So this is an implied dealing range or a swing grade from the high to the low. This is our silver area. I need to see a retracement into here and then a one-sided distribution lower. If not, we'll just see what 10 a.m. does, right? Like it doesn't have to retrace here because order flow could just be heavy. 4-hour candle could close near its low. For example, the 4-hour candle could close here. The next 4-hour candle could offer a very shallow retracement and then just continue. And in which case, I'll look to trade 10. So if we don't hit the previous day low by 10, I'm trading 10 into the low. It's pretty simple, right? Like if we don't hit If we do hit PDL by 10 a.m., I will trade. Oops. If we just open 10 a.m. like here, then I'm looking for a small opposing run and then distribution, right? Something like that. So I will trade the open, high, low close of that first hour of 10 a.m., that 1 hour PO3. I'll trade this at 10 a.m. This is the 10 a.m. open. And I'll position myself here. Now, if we open 10 a.m. here, I will trade the open, low, high, close, and I will position myself in here. Okay, we'll see. It really depends on what we do with the liquidity by 10 a.m. Again, just looking to position myself in a higher time frame power of 3, right? We have a talking note about YM. I assume YM is going to be the weakest asset, like it has been. Let me see if it ran the lows already. I don't really care about the divergence if it did run the lows yet. Yeah, I don't really care. Previous day low is the most important objective, right? So all 3 indices, including especially ES, wants to reach into previous day low. ES will reach into previous day low first. ES is actually weaker than YM to its objective of previous day low. Right. So is Nasdaq. They're both these indices are pretty weak into these lows. The PDL, PDEQ, and PDH indicator is just FX for living with everything else turned off besides that. I have everything else turned off besides the previous day level. Just so I don't have to plot it myself every day. We could just change delivery state here and then trade lower. It's very possible. I'm not going to trade it though into previous day low, guys. I won't position myself in this low resistance like silver bullet area without seeing some manipulation beforehand. It's just not worth it for me. There's not enough meat left on the bone. Today's a day that I very likely will wait for more information than I usually do because we have expanded so much in the overnight session. Just err on the side of more information of the market. We're pretty flat on the week actually, right? So Monday, we lost 1 hour. 1 hour. Tuesday, we actually made plus 2 hour. So we're up about 1 hour on the week. They're relatively flat, pretty much, right? I actually got less than 2 hour because I only took out like 50% of my contracts at 2 hour, and then 50% were break even. So it's actually just around 1 hour from the way I managed it. So I'm flat on the week. Just because I held more contracts yesterday, past 2 hour, and then it came to break even. But I'm not forcing anything into NFP. NFP is a good week to stay flat, honestly, until like the later days. Yeah, today's ERL to IRL or IRL to ERL, one of the two. Right, the ideal formation here is something like this. Take out a low with SMT, and then create a gap, and then trade into the gap. Like either this gap or this gap. I prefer the higher gap because it overlaps with this order block and the previous day's equilibrium. So these are my key levels. So any open low of this candle doesn't really interest me whatsoever. Only the open low is being the manipulation phase of price into a distribution higher. Right, so I want this candle to open low, high, and then form a wick at the high, like that, with SMT. For any long wicks, I'll also mark out just EQ of that wick. I want to see what PD arrays exist in EQ of this wick, essentially. Right, because this wick is a lower time frame V shape. So it looks like this on the lower time frame. That's what that wick is signifying. And you can see that right here, right? So we have this order block. So this wick, the PD array of interest, is the mean threshold of this order block, you can see. Realistically, just this. Right. Should we take a look at some other markets? I don't mind. Let's take a look at our silver and gold markets. Okay, let's look at Eurodollar and GBP USD. Again, don't really buy anything until we come into this low. Still looking for that low. You can see this 4-hour gap here. Still really choppy through it. Same one we talked about yesterday. Just really no expansion yet of this market, and these lows are so juicy on GBP USD. So again, trading the Forex market, I'm not touching anything until we come into that low, essentially. Let's go silver. Let's go gold. I have a very similar argument here for silver and gold, actually, where I'm really uninterested in anything breaking this range until I see silver take out this low. So I think we'll just range in this market here until we get this low consolidation taken on silver. Again, there's just not a lot of expansion that we can see. The daily chart has gone into this phase here where we have these imbalances now. So we have accumulation and we have imbalances below us. We have a really obvious swing point on the daily chart on silver. Let's wait for that swing point and then try and engage this market. If you notice, the gold chart has not provided great opportunity in the past couple of days. It's been really range bound, like really range bound. Look at this New York session. Look at that New York session. Look at this New York session. So it's just not a really great expanding market right now. So it doesn't really have my eye. I'm not really interested in trading this market. Just I can, again, see that gold probably wants to create a new all-time high. Gold probably wants to do this. And silver probably wants to just do this. Okay, let's get one more market, which is Dixie, which has a correlation with gold as well. So we came into that fair value last week, which was nice. You can see we had this higher time frame weekly gap and daily gap. And now we have this daily change in the state of delivery here. All right. So if we're assuming an inverse correlation, that makes sense. And do we have a higher time frame draw on the dollar? Yeah, we do. I assume that NFP will just continue the dollars trend and trade lower, with this being the next objective, right? This weekly imbalance, devil's mark, and monthly fair value gap. It's a very, very shallow sweep at that level. Right? And we have no daily realignment out of it. You can see out of the monthly level, we had daily realignment into this gap, and now we're breaking down lower again, meaning we didn't invert this major inefficiency. So I'm not expecting the monthly chart to offer support here. So we just keep trading lower. Are those all the major markets? Yeah. Look at CL and RB. This is not bad. This market looks a lot better to trade, actually. You can see we have these highs, which are very equal. We have internal. Yeah, this market looks good on the higher time frame, actually. If we could see like CL give us this SIST, you could take a positional trade on crude. A large SMT for me. You probably want to trade RB instead. I'll keep this chart up. It's interesting. Yeah, that's all the major markets I follow. Like, I don't know if you guys want me to look at something else. Let me know. Silver swings are gonna slap. Yeah, once we get some realignment on silver and gold, I'll look to trade that market once I see some realignment. As soon as silver takes out these lows, guys, I'll look to trade gold on the next leg higher. Gold's a way stronger market, but I just can't really long when the order flow look, because really all I'm seeing is LRLR being generated here. High resistance, right? On the sell side. But we're not breaking out of these highs. Like we're like, this is just like, look at the dealing ranges. Premium lower, premium lower, OTE lower. So until we actually start breaking out of this channel, you could say, I guess, for lack of a better word. I mean, we don't really use those words, but we break out of this downtrend, right? And there's a clear area where I want to see price break the downtrend. It's here. I think this is going to be more or less a consolidation of this market. Like, draw a big box. I highly doubt we'll leave this box on gold. Highly doubt until we take out these lows. Did I cover Bitcoin? I can look at Bitcoin. Sure. Oh. This is why I can't. This is why I don't trade Bitcoin. What the fuck is this? Look at that candle. That is such a fuck you candle. That sucks. Imagine if you're in any positional trade. That's terrible. This is like very unhealthy to trade, right? Like, you can't trade this because if this happens, you don't. It's unintuitive. Look at it. Nice. Great. No matter what the fuck you were in, no matter what your TA is, you're probably liquidated. All right. Yeah, it's just impossible. It's like pretty much just impossible to trade that. So yeah, I mean, Bitcoin looks like shit still. This is the level I wanted to buy Bitcoin at, though. Like, this 80,000 level, right? It's very interesting to me. I want to see if we can hold it. But yeah, I don't know. I think trading this market's pretty much impossible because I still see shit like this happen. And if I see shit like this happen, I just will not trade that market. It's not a liquid enough market. If price can do this in 1 minute, The price can ever do this, guys. You just don't trade that market. It's not liquid enough for you to trade. You're not gonna beat that. You don't outperform this. You can't. It's impossible, right? That's annoying though. If you're just like in a positional trade on Bitcoin, and then you just get a 5% wick, like a 5% wick in 1 minute. Yeah. Oh, it's low liquidity. So maybe there's a better. Okay, maybe Coinbase. Maybe it didn't happen on that. Okay, maybe you're right. Maybe there's much. I mean, this is still aggressive, but better. You're right. You're right. It's not a 5% wick. It's only a. It's not in 1 minute. It's only a 2% wick. Okay, maybe I was just looking at the wrong chart. Yeah, I still my only look for Bitcoin, right, would be like positional trading it and seeing if this holds. That's it. There's nothing really interesting about this chart right now. Yeah, I don't look to. No, I don't trade YM or RTY. No, I don't. Those aren't assets I regularly track. I'll look at YM for ES divergences on occasion. Yeah, there's not great correlation between Nasdaq and YM and RTY, and I typically try and trade the highest correlated assets. The highest correlated assets are ES and Nasdaq. So if I look at a correlation coefficient between these two indices, it's the highest. I use YM SMTs when YM and the ES are moving quite similar. So sometimes there's better correlation in the market, and other times there's worse correlation in these markets. When they're closely correlated, I'll look at them, right? But sometimes YM's just in its own world, and there's just less correlation on the lower time frame, then I don't look at it. Empirically speaking, the highest correlated assets are Nasdaq and the S&P. These two are the most closely correlated. Yeah, Trump is speaking today at 4 p.m. I am aware of that, which is why I'm framing a fairly low probability session. Yeah. It's also just like NFP week. So typically speaking, probability decreases as the week progresses. So you can trade Monday. Is better than trading Tuesday. Is better than trading Wednesday. Is better than trading Thursday. And then Friday, of course, is the best day to trade. Right, so Monday's higher probability than Tuesday, then Wednesday, then Thursday, and then Friday's higher probability than Monday, and all the rest of the days. Generally speaking, this is true for NFP weeks. The closer we get to that folder, the more likely market is to not offer expansion because there is anticipation of that folder, right? So we're generating a range. I think what we'll see on the open is something like this. The next 30-minute candle will do this. And then I could look to trade lower off that. That would be an expectation, right, for this next 30-minute candle at 9:30. Nasdaq looks a bit weaker. The ES is holding that 0.5 level quite well. Yeah, I posted a new YouTube video on aligning expansion candles. It's the same one I posted on Twitter a couple of weeks ago, but I know some people can't watch videos as well on like Twitter, so I posted on YouTube as well. Let me just pin it here. I'll probably trade full size today if I get a good setup. If not, I'll probably risk loss. I'll let you know. I'll let you know exactly what I'm seeing. I'll use some discretion with my sizing for sure, depending on what the setup looks like. Yeah. This video is about looking at different expansion candles from the daily to the weekly to the 4-hour to the 1-hour, right? It also talks a bit about market cycles, right? How we can't go from accumulation to reversals. It's a good one. Yeah, about 5 minutes to open. Probably not going to trade today until 10, to be honest. I want to see how this 4-hour candle closes. If we close near the low, I'm just going to look to trade 10 a.m. small wick and then lower. Ideal formation is going to be a continuation of 10 a.m. So 9 a.m. closes here. 10 a.m. forms a very small wick into some level. And then I start to see an expansion of the 10 a.m. candle. And I want to position myself probably here, but maybe even somewhere in here. And I have a clear draw, right? I also really like this level down here still. Had that level marked out yesterday. It's an unmitigated fair value gap in this order block as an objective. Yeah, aligning your time frame really matters with your daily profiles, right? Your weekly profiles are important, your daily profiles are important, and then your intraday profiles are important, which is why I teach all three. I mean, if you want to trade with higher frequency, you have to be able to use more than just daily profiling. You have to profile a chart from the top down and then give yourself a soft bias every single day. Or else you're gonna be waiting for higher time frame realignments, which are not bad, but you're gonna be taking more positional trades than day trades. The balancing act. And previous day low looks really juicy. We'll see what 930 does. It lines up with a midweek reversal. Yep. Opposing run Monday, Tuesday. I mean, pretty much the exact same profile as last week, right? Opposing run into Tuesday PM session and then a Wednesday reversal. The only difference is the weekly profile and the core data that's being released that's high impact don't align as well this week. I'm gonna see if we hold this SMT like we talked about, right? Again, just like yesterday, gonna be super patient. Pick my shot, right? When I get an opportunity, then I'll strike when it's really obvious to me. I don't want to force it. Wait, we have failure swings in the market down here as well. 50-minute chart, you're going to see a consolidated low in here, right above our objective. We had red folder news, yeah, at 8 a.m. this morning, 8:15. I'm pretty sure today was ADP non-farm employment change. Different than non-farm payrolls. That's the so non-farm employment change is the number of jobs, and then non-farm payroll is the amount of payrolls being issued through non-farm. Similar. What do I think about CL and RB? I looked at it already, actually. Like I said, I'm going to be watching the hourly structure here on CL. There's some realignment out of this daily gap. I've never day traded it, but I would take like a positional trade on RB. Like this chain to stay delivery. I take a positional trade on RB. That'd be nice. Right. I've never day traded it, so I would just use the daily hourly market maker model, trade into this high. Right, that'd be a daily into 1 hour positional trade. Wouldn't be bad. Right, something like that. Okay. Let's take a look at our good old indices into the open. So we can see that we're getting that 30-minute change of state delivery right here. Let's see if 9 a.m. offers an opposing run into that level. Maybe we can get on side with that for a distribution. Or we're just going to take out the previous day low. All right, so 9:30 opens up, right? Come back into that opposing candle right here. Notice how we don't get a change of state delivery on the ES. We do on the NASDAQ. Interesting strength and weakness profile here from that 30-minute closure. Right? Very interesting. Right? Look at the bodies here. Quite telling on the S&P. Make this solid. All right, so you can see NASDAQ comes back into that 30-minute and 50-minute opposing candle. Right, and now we start to trade lower. Again, like there's just not a lot of meat on the bone here from you guys to approach a trade into the previous day low here with this current structure. Like I would look, there's not an issue with using a lower time frame refinement here whatsoever. There's no issue. I just don't think there's enough meat on the bone for this trade for me personally. Like how many points, even like the risk structure here, right? I see relative equal highs, even if I'm covering the swing. It's like 1.5. But like it's just like a bottom. I'm shorting the bottom of the range. I typically don't do that, right? Yeah, my draw on RB is higher. As a positional trade, I would take RB with an hourly change of state delivery from this daily into 1 hour model. I'll take it to these highs. It looks very decent as a positional trade. Right, we have the SMT in the daily gap, and then that hourly structure realigns with this change day delivery. We have a small 15-minute imbalance right in here. So if we can form some sort of divergence in there with the S&P, that'd be very nice. So realistically, we want to see if ES can run out these highs and then look to trade NASDAQ lower, potentially. That'd be very interesting for me. So we're looking at this high right in here on the S&P and this high right in here on NASDAQ. Right? That'd be a divergence. Like we talked about, right, with that 30-minute candle offering the previous candle's low, coming back into the range, and we have a change day delivery here on the NASDAQ. So this is the invalidation if NASDAQ also runs that high. In which case, we look for the higher time frame area of interest, right, which will be up here in these hourly gaps. Right, these are the hourly gaps above us, all of these inefficiencies here. Right, so now I just wait for those higher time frame levels to be engaged. Look for a realignment. But again, that changes to a delivery here, or that order block, that opposing candle doesn't have a lot of narrative to short from, which is why we don't take a short on something that looks like this, right? We don't take a short on like this candle close. It wouldn't make any sense to do it. Again, we don't want to short the bottom of the range here. We want to frame like a lower time frame fractal and reversal here. Yeah, this RB looks really nice actually. As a positional trade, if I get the hourly SSD. I'll keep a look at it at the hourly close, 10 a.m., right? At the open of 10 a.m., I'll see. So we have NASDAQ coming back into hourly order block. We have the 4-hour candle, right? Pretty large wick. So we want to see in the next 20 minutes some redistribution from here if we want to trade short in the next candle. Or, like I said, it just keeps this low as a failure swing, right? Because we have an accumulating market. Not really conditioned to short right now at the moment at all. These standard deviation projections from the London SMT. Yeah, maybe. Oh no, I'm not convinced on the structure yet. Just like yesterday, I got to see something more obvious. It just looks like a large overnight expansion into a retracement or potentially a reversal. Right, we're just ripping, like literally just 930, just face rip higher. Right, look at the 1-minute chart. Pretty unintuitive price action. So not much we can do at the moment besides watch. This doesn't fit any edge of mine. If we inverse 6 a.m., shorts are cooked. Yeah, any strong closure. The opening price, 6 a.m., yeah. Other side of the range. I mean, so far we're just respecting this 4-hour down close candle. We don't have any great SMT. YM didn't take out previous day low either. Right? Just a range, guys. Just a range. Which we expect, we can anticipate. We don't expect a lot of expansion on either side of the market. This is just the market really, really punishing early participants in the weekly perspective, right? Market's not going to expand lower today. We don't expect that, right? And before such high impact drivers such as a Trump speech and NFP. So this is just really punishing those who are offside in their positions. Meaning a positional entry short at this 6 a.m. open, like we talked about earlier. This positional entry short has now been punished, right? In about five minutes or less, right? 200 points in 5 minutes. That's punishing that positional entry. It's also just like not intuitive to trade, so there's nothing that we're missing, right? It's not a move we can't short this candle anymore, like without real confirmation of rejection here. It's also not a candle I would long because there's just no divergence at the lows as meaningful for me. So it's just a wait and do nothing kind of candle. If you're not willing to just like allow these candles to print in the market without doing anything, you're never gonna be able to make money. This is not a position that you want to be involved in my opinion. Like, yes, you can just get lucky in several instances and just like catch a random 200-point move, but it's not something that's reliable or consistent or logical. You want your trading to be a safe space, right? Like a very clean, safe space where you're doing the right things. Trading this is not the right thing. Look at it. You tell me why this happened, and I'll give you $5. I'll give you $500. It's a bull squeeze. Yo, nailed it. It was a bull trap, or it was a bear trap, my bad. Look at all that trend line liquidity in here. Get fucked. It's funny. I even said, like, remember I said, like, all of this looks like LR too? I'd be involved in this move if we came into this low, for sure. If I could frame some higher time frame pivot of the market with SMT, I would be involved in this move for sure. Because I like running all these highs. I don't like any of these highs. None of this is like great manipulation of the daily range. Look at ES, absolutely face ripping, too. No, there was no SMT. There was a PD array divergence of the new week opening gap, which lends credence to ES being stronger. Right, ES creates a higher high here, it creates a higher high here, and it creates a higher low here. So it gives credence to this being stronger. But it's not positionally like tradable. RB's hourly closure here is pretty interesting to me though. Seriously, right? We have daily fair value gap SMT. Right. 1 hour changes to deliver. So 20 minutes here. Very decent for RB. There's really, really nice failure swing conditions of this market. Failure swing here. Failure swing here. And failure swing here. Right? This is a low resistance liquidity run signature. Several failure swings. This one wouldn't even give you a good risk multiple though. These all would. I just don't trade this market very often, but I'm more than happy to look at it. I mean, I can't really short this candle, guys. I'm not going to short it. Shorting this is like stupid. Look at the 4 hour. I don't care what SMT forms up here. It's not a good 4 hour candle now to short the open of. Unless we get a very, very strong reaction into the close. I mean, like we have to close back in below previous day equilibrium kind of thing. It's just not a favorable candle to take a short position on now. I'm going to get rid of this daily Cibi up here. We already know we traded into that. I just don't want it on my chart. It's kind of making my chart a bit messy. We already know we have a daily gap here, right? We are in a daily gap, guys. Right? News flash, spoiler alert. You're inside of a daily gap. I'm not shorting this 4 hour candle right now under any circumstance. This looks good. This looks like the best market, especially if we can get a closure through previous day high. I just don't trade this market. I've never taken a trade on like RB before. So I'll probably just tape read it. But this is like the best structured setup right now. The best signature price as well with these failure swings. Oh yeah, we're not shorting that. Yeah, we're not shorting that. We just flipped the 6 a.m. candle bullish. You can't take positional swings on Apex. You can't hold like overnight, for example. No. This is. I'm looking at the other side of the range, guys. Where's the CE of this daily for value gap? Did we hit it? Maybe we didn't hit the CE of the daily for value gap yet. We actually didn't. Interesting. It's a decent draw. I mean, you have to be clinically insane to short this candle now, right? Yeah. RTY took the lows. Yeah, I don't really look at RTY, guys. I've never looked at the Russell. Maybe that's our divergence. Even YM didn't take it, though. I'm going to use the ES and NASDAQ. Empirically, they're the highest correlated assets, so you don't want to build edge cases like around one-off comparisons. You want to build an edge case off something that you have like consistent amounts of data for. I don't have the data for RTY to say that, so I'm not going to make that like an edge case of SMT to consider. What I will say is that this is not going lower right now, and I will never short this 4 hour candle now. I will never short the next 4 hour candle ever either. 10 a.m.'s short would reverse the entire range, and that's not an expansion. This is not a candle that's aligned for expansion lower, nor is it a candle that I want to long inside of here. I want to see it settle near its open and then maybe form an open low high close. This is a good day to do absolutely fucking nothing. And if you have the discipline to do nothing, you'll be a successful trader. Like, this is a day to realistically do absolutely nothing and be okay with that. What would I want to see to go long on ES and NASDAQ? Really small opposing run at 10 a.m. into a key level with SMT, and then a change day delivery where I have a really tight stop loss. I want to see a wick that looks like this. That's the only way I can trade 10 a.m. is if we have a really small opposing run. Because I have a really small stop loss then. I don't trust this. Yeah. It's a good day to do nothing, guys. We have a little SMT forming right there. Again, if that's the reversal, I'm not going to be a part of it. Yeah, you just don't short this 4-hour candle that follows this candle. You don't short it under any circumstance. That's why I keep my new week opening gap on my chart too, because on a weekly candle that I'm anticipating accumulation for, the new week opening gap is a good pivot for that accumulation. Look at the sensitivity to the new week opening gap all week. There's sensitivity to that area, so I keep that on my chart all week. Right now, it's just a sweep, a previous day high on RB, right? Closures are important here. There's no analysis you should do on RB until 12 minutes from now, until 10 a.m. essentially. At 10 a.m., you can do some analysis here. Till then, just wait. Honestly, same for NASDAQ and ES. At 10 a.m., you can do some analysis. Right now, just let it print whatever the fuck's gonna print in here. Patience. Yeah, extending out your new week opening gap in a week that has an anticipated accumulation function is very, very key. It's a very prudent thing to do. Again, extending out your new week opening gap in all cases can be beneficial. But on a week like this, I largely don't care about this new week opening gap as anything more than a rebalance and then redistribution from. Once we trade through it, I want to see redistribution from it because that weekly profile supports expansion. Internal on the weekly to external on the weekly. This weekly profile does not support expansion at the moment. With the weekly candle, we reach into a higher time frame weekly objective, right? And then we have accumulation, and we can see accumulation in the market on all time frames. Look, we are accumulating. This is the range high. This is the range low. The range low is set on Tuesday. The range high is also set on Tuesday. So we are accumulating inside the range. Actually, sorry, the range low is here on Monday. My apologies. Yeah, Monday takes out that sell side on the weekly. I forgot these sell stops all the way to the left. This is super, super bullish. It's like a crazy bullish price. Crazy bullish hourly candle. This is like the fuck you candle for everyone who shorted, guys. Look at it. Look at this candle. This is so unintuitive to trade though, right? What we want to see is if 10 a.m. can realistically probably close above here and then trade back into like this. Like this here is decent for me. And ideally, we don't want to take out the buy stops first, ideally. But that's very unlikely given how strong this closure is at the moment. And you want to see something interesting? Look at the daily open. What has the daily candle done so far? What has the daily candle done? Nothing. We've done nothing. It's an expected accumulation day of the market. There's no relevant driver. News is on Friday. And we've now essentially spent the entire first, 6 p.m. to 9 a.m. So 14 hours of the day for a 20, 40 point move. Look at the daily candle. Hasn't done anything now. We've just invalidated the entire sell side delivery of the day. Done nothing. Watch the daily open. Any positional traders have just had their entire day removed, right? Positional traders, I mean someone who's shorting a higher time frame change in state like this and targeting a very high time frame pool of liquidity like this. This trader is now just been taken out of the market. I would say this is delayed protraction, yeah, for sure. But there was no significant trigger to get me involved in the trade, i.e. there's no SMT divergence. But yes, it is delayed protraction. Let's see if ES closes back within this gap. Right, because we have SMT that forms on our higher time frame chart inside of this inefficiency on ES. I'm gonna see how the 4-hour closes, guys. 5 more minutes. Kind of a snooze fest, though, to be honest. Like, I'm not interested in this. Pay attention to the SMT at the highs. The invalidation, right, is going to be if we come above these buy stops, because this is the last higher time frame SMT. Right? This is where we form that divergence of the market, right, at these highs. RB is toying with that change in state. I'm not going to trade RB. I've never traded it before, but I'll just tape read it. Like, if I was trading RB, it'd be a positional trade at this hourly SSD, risking that low and targeting this high. So over the next, whatever, session, 2 sessions, or day, I'm just not going to trade it because I've never traded the asset before. I'm not going to put risk onto my personal account, like my personal fund accounts or personal capital. But this is the best structure, I think, at the moment. Previous day equilibrium as support here now on the S&P. Hourly closure through the imbalance is very telling. Get rid of this SMT for now, so we can watch the closure. Gold shorts. Wouldn't short gold. Would short silver. But I'd rather long gold when silver takes the low. I wouldn't touch this market until silver takes that low. It's just accumulating. This is still the best look. I just don't trade the asset. Especially if CL gives the change in state too. Very, very good look. But you take it on RB, it's obviously stronger. Oh yeah, this is pretty bullish. So this hourly inefficiency is no longer of interest to me, right, on either index. Especially if we close through on the ES. It's a nice entry right here. Right, positional entry. Something I wouldn't mind. I'll just tape read this, right? Okay, so we can see 10 a.m. actually comes back into this 15-minute imbalance right here on the Nasdaq and the ES. It's a really nice close here on CL as well, right? I'm gonna not look at this market so much right now, but I'll go back in and review it at the end of the day. I just don't trade that market, yeah. But it's still nice to see, like. So you can see here, we have a continuation framework with the SMT. Inside the gap. So this changes day delivery here, right? A decent signature, actually. I'd rather, like I said, I'd rather wait for a higher time frame close, like a 3-minute chart, but this is showing clear intentionality as well, right? Like even a market entry is decent. It's just like so high up in the range. Right? We're very, very likely going to come into these buy stops here. So we're just going to look at these Asian highs. It's a huge imbalance. I mean, institutional order flow entry of that huge imbalance, right? Right down here. There's the SMT divergence. I would long Nasdaq. Previous day equilibrium being support for the ES is also very interesting. Yeah, if we can come into this gap down here and offer some sort of retracement before we continue to expand, I would get in long because this SMT has been invalidated and this is my draw on liquidity now. like for me, just getting involved here has quite a bit of risk because we have such a shallow institutional order flow entry drill of the 50-minute gap. It's not that it's bad. I just would like to see some disclosure now and then a retest. I want to get involved in one of these inefficiencies of price. So I will very likely be looking to long the NASDAQ to the external range high, guys. That's the logical precedent here. I'm just going to wait and see if I offered any sort of retracement. Makes a lot of sense. Yeah, pretty external range high is a draw. This entry here does not offer me appropriate risk structure, however. To manipulate the R here, I would only get one R if it hits my objective. I need to wait for a pullback. It needs to offer a pullback or else I cannot get involved. So because we've closed above this hour, because we've taken out this SMT, previous divergence, I'm not anticipating a reversal until this high is ran. This gap in here is relatively insignificant for me. In fact, it's not significant whatsoever. I only risk about 2 contracts. Look at that market after, guys. I'm going to be focused on taking an entry here. So there's this 3-minute fair value gap in here that we have a small divergence at these lows. But again, the risk structure is just inappropriate for me taking an entry here. No, I'm not gonna limit this entry. No, I'm in a market entry when I see a realignment. I ideally want to see some sort of divergence of this gap. We've tagged this gap. We have a small divergence in here at the moment. I'm not going to short, obviously. I'm not going to long this move into the gap. That wouldn't be well advised to do, right? You don't really long that. You don't long candles that look like this into an inefficiency. So you wait. We've now engaged that 3-minute change in state of delivery level. And again, we wait because I'm not convinced. I need to see things align a bit better. Because we still have higher time frame divergence in here. We have a massive expansion and a very small institutional order flow entry over the 50-minute gap that leads to a new high with SMT. So I'm cautious. This is not like very pretty price action for me. Trade. We do have an SMT at the highs, yeah, off of this internal range of liquidity going to external. We've just invalidated the prior SMT that existed in the market. The previous SMT was here. We have invalidated that SMT on the NASDAQ by taking out that high. We have a new SMT in the market. The ES looks stronger here too, actually, on the lower time frames. So I'm going to, again, use candle closures and relative strength to take a position if I do. This is where I want to be aligning myself inside of this leg for a redistribution higher. If this SMT supports price. Hourly candle is not a very nice open though. I would have much preferred an open low and then expansion. So again, just gonna be patient, guys. This could easily form a reversal here. Something like a closure through this low with displacement could easily confirm lower prices. I'm not yeah, I like what Aaron said. I'm not confident in anything here. Right? This institutional order of 100 over 50-minute gap is very small. And now we don't even have that SMT, so none of that analysis in there is prudent. Doesn't really matter to me. You look at the higher time frame candles here, these are just disgusting candles. Right? Hourly looks pretty trash. 4-hour looks pretty trash. 30-minute looks pretty trash. Like, look at this. You want to trade into these failure swings, but not really through them unless you get a good realignment. Higher time frame is bearish, lower time frame is bullish for sure. For sure. ES looks a bit stronger here. With failure swing objectives in the market like these highs. Yeah, I would take that 6 a.m. short if I was in front of the charts. Absolutely. Yeah, I'm gonna be a bit more patient, guys. Not seeing anything fantastic yet. Ugh. Has to be screaming in my face, kind of obvious. You know what I mean? This is just respecting bearish PD rates at the moment. We have no great SMT at the low. Just can't really short this 4-hour candle. Have to look for a continuation framework. We just priced in the opposing wick here, right? So I'm gonna keep watching RB. I want to see it find some support inside of this opposing series of candles. Again, for a positional entry, it doesn't really matter because you're entering on this close and you're holding for that high. But if you're gonna like day trade it, it does matter. I think this will come back into this range, guys. I think it'll come back into here. Like there. Question is, do we want to take out this high on ES first? I would want to position myself to the external range high in some capacity, given the trend and the closure of the previous 4-hour candle. Given this close. I would get on side like along like this on ES. Wait for that 5-minute to close. Yeah, I'll take an entry here on ES, guys, for a couple contracts. I'm going to anticipate this 5-minute change in state forming. I want to be very close to my invalidation here. If we create a new low past the 10 a.m. low, I don't want to be involved in this anymore. So I'll take my entry in here to give me better risk structure. Really tight stop, actually. Using that inversion in here. I'm just going to be targeting the external range high. So because we invalidated the previous SMT here, I want to see if we can get strong up into these highs. Yeah, my stop loss is going to be this wick here. This wick. Right at that low, that's a 10 a.m. open. Just about 2R. I mean, it's just over 2R, rather. Right, because I'll also be closing back through the 3-minute inversion if it comes into that low. It's a continuation trade. There is no SMT divergence. There is no SMT on the reversal either, actually, as we noticed. I'm using the fact that we invalidated this higher time frame SMT on the NASDAQ. So we have a failure swing objective. But yeah, it's definitely not SMT aligned trade. I'm risking half a unit, not a full unit. We don't have an SMT at the reversal lows either, but I'm using the failure to hold this SMT at the highs as my invalidation. So like this SMT in here has been invalidated by the market. So now I'm looking for the next pool of liquidity that exists, and that next pool of liquidity is the range high. There's nothing else in here that's significant for me. This fair value gap is not a significant reversal area for me. Again, any strong closures back below this balanced area of price, I'll also look to exit my trade. I either want to see it expand and create a 15-minute change in state of delivery here, like this, right? Or if it creates a new low, I'm not interested. Right, we have this balanced price range in here. On this 3-minute chart, we have this fair value gap and this fair value gap. If we're going to create a new high, it's going to come from this range. This SMT that we have at the London highs has been invalidated by NASDAQ's price action. NASDAQ is traded above this hourly SMT that formed in the previous session. So if I mark out my hourly SMT, this SMT divergence is invalidated the minute NASDAQ comes above this high. So now this is not a relevant reversal pool of liquidity because the SMT that was existing there in the high of the day has been invalidated. So now I say, where else could price reverse from? I see the external range objective as a reversal area of price. There's a logical cadence to that statement, right? If you're not forming a reversal at the swing divergence here, the minute NASDAQ trades through that, the SMT no longer exists. So the next pool of liquidity for a reversal has to be a swing point or an inefficiency. Now, this inefficiency is just largely uninteractive for me. I don't like, because price formed a divergence in here before and then traded lower, this inefficiency will not reverse price in and of itself. Does that make sense? I hope that makes sense. What I'm trying to say is that this SMT in here has been invalidated right there. Now I want to see expansion, right, out of this balanced price range. That will confirm the order flow for me. And if I can see expansion, what I'll do is I will trail my stop loss up to this intermediate term low. So if I can see strong closures through here, on the 5-minute chart, for example, I'll trail my stop to there on the 5-minute chart as well, because there should be a breakaway gap because of the deep retracement and immediate rebalance. So if the 5-minute candle closes through here, what I'll do is I'll trail my stop here to really reduce my risk, which I will do right now, okay? So now my stop loss is trailed to here, 5660.25. Because if we are to retrace this 5-minute inefficiency you see right here, this very small one. Here, let me show you. I'll keep this on my chart and I'll just say, if we are to retrace this very small inefficiency, then this 3-minute balanced price range does not provide a expansion. See? So now my stop loss is right here. And again, I want to see ES expand through these highs as well towards the range high. Right, so anything that comes back into this low, it's not interesting to me. It's unintuitive because price has already created a balanced price range and expanded away with a 5-minute change in the state of delivery. This is a higher resistance liquidity run already if we do not expand out of this order block. Again, just like yesterday, right? We're looking to see that this order block we created supports price. Price does not need to come back into this low if I want to see it expand. And if it does come into this low, I don't want to trade it because then there's nothing stopping it from coming into any of these lows. Got it. So because that swing point was previously an SMT, yes. So this level in the market that we framed a reversal from for the daily range is invalidated by this wick. As this wick comes through this level, therefore we have now invalidated that divergence. ES doesn't need to take that high. And NASDAQ's already taken that high. So now there's no SMT here. There's a new SMT forming there. And that new SMT could lead to a reversal potentially. But for me, the next draw on liquidity is the range high. But you can see we're in a new phase of price here where we've gone from expansion into consolidation. So I'm expecting more expansion, right? We don't have SMT on either side of the market that's high probability right now. The low of day has no good SMT either. So I'm looking at this from a market cycles perspective and invalidation perspective. So this is the invalidation. The best way I can say this is the invalidation of high of day. So if price trades above this high, I've invalidated my high of day forming here, or in this case, my high of the session. Okay, that's the invalidation. So now I'm trading the invalidation using a balanced price range and a market cycle an argument. We've gone from a expansion into a accumulation, into an expansion, into a retracement. The only thing price can do here is expand. Unless this new SMT supports price lower. which I do not see based on the accumulation, because reversal does not lead, or accumulation does not lead to reversal. So it's an argument of this market cycle we're seeing in here and the invalidation of this high of day. Like I said, this trade is objectively a harder trade than trading from the bottom of the range higher. But there is a logic to the trade that I will utilize. And also, I have a very tight invalidation here. My stop loss is my stop loss is 4 points. But this trade is more of a subjective trade, for sure. Like, if you guys are asking me, what is the Primo model variant of this? It's not actually, because we don't have SMT at the lows. The failure to SMT here means that this is not a true reversal. So now I'm not trading a Primo continuation. I'm trading a invalidation of this high of day. I'm sorry if that is a little bit more complex, and there is discretion in what I'm doing today, for sure. But a profitable trader uses discretion. I'll never say I don't, because I do, and I'll try my best to explain my discretion the best I can. But sometimes it's going to make a little bit less sense, and that's the reality of discretionary trading. Because you can see here that my model has formed an invalidation and not a validation. So I am trading the invalidation, which is me saying the high of day SMT has been invalidated. So I will seek the next pool of higher time frame liquidity and utilize a risk structured equity. So the invalidation is right here. Now ES has also provided the invalidation. So once this SMT that we had is invalidated, I will now seek the next pool of liquidity, trading the invalidation. The next pool of liquidity that's relevant to me is the range high. There is nothing in this range besides this swing point that is a valid reversal level for me now. So I'm trading towards that objective. Right? The model for today, you can say, is trading the invalidation, but that's not a model I've taught you. I've taught you how to approach structuring your trades around swing points like this, but this is not a reversal the way we define it. So this is not a continuation the way we define it. I'm just trading the invalidation of the SMT. If you want an example of a trade I did that's exactly like this, though, however, I'm gonna pull up an example. So I traded the invalidation last week as well. I'm gonna pull up the analysis channel and point you to that. Okay. So I want you guys to catch this. Now this is a similar case where I've traded the invalidation. Okay. So because we did not respect the SMT at the range high, I found an opportunity zone to the external range high. Do you see how there's no SMT in my entry? So look at this. Let me point you to this screenshot. This in here, do you see where it says SMT invalidation at the range high? This is exactly the same trade I'm in right now, actually. So because we have not formed a valid high of day or high of session with this SMT, I am trading that strict invalidation to the next pool of liquidity. Does that make sense? I want it to make sense, but I don't expect you to say yes, I would have seen that, because this is not something I've directly taught. But if you please look at this example, I'll literally add here, people. This is the same case, right? It's the exact same thing we did on FOMC last week or 2 weeks ago. We trade the invalidation of a relevant divergence being invalidated. The relevant divergence is high of session or high of day. The new opportunity zone exists between that diverged level and the next pool of liquidity. Right? So this is the equivalent of me saying this is my opportunity zone in here. Now, will it deliver? I have no idea, right? This is just a single trade. But this in here is the opportunity zone from the SMT invalidation to the next pool of liquidity. Because we're framing a reversal. So if a reversal is going to occur, it's going to occur up here. Right. Hmm. I'm not saying it's easy to trade. I'm not saying it's easy to see, and I'm not saying it's not without discretion. I'm not saying any of those statements actually. It is discretionary. It is difficult to trade, and there is a reason why my job is to just take the trades that I would take and not try and like sugarcoat anything. Right? Some trades are going to make a lot less sense to you that I take, and then you might not want to involve yourself in those trades. But the most disingenuous thing I could do is take the trade and not try and explain it to you in any sense. Right? I mean, if I'm putting the risk on, I may as well try and explain my thought process to you. Right? That's what makes me a profitable trader. I use discretion in my trading. If we could algorithmically code my entries, we would, and then none of us would be here, including myself. I would just allow an algorithmic entry to take all my trades for me. It's not like that, because for me, I'm uncomfortable with trading down here. I need to see something that I have defined as this is something that I have defined using my own concepts. Like, I have defined this as this is something that I have an understanding of based on my perception of market structure. But this is not something that's objectively true that every trader in the world is going to see. This is something that I am trading as a concept that I use, like my own PD array, right? So if I was to say, oh, you should understand 100% why I'm trading this invalidation, you're going to be like, that doesn't make much sense to me. Also, what might not make the most sense is the fact that NASDAQ creates the higher high, and yet I choose to trade ES. And that's again based on the strength of the closures following the invalidation. Right? Gotta make an ICT type name for it? No, like I don't. If you guys notice, like there's nothing I can market about this. It's just what I did. Will I move my stop to break even? I'll let my trade breathe with a really tight stop loss here. Like I have a 4-point stop loss. If I lose this trade, I'm gonna lose $100. So I'm risking 100 for 300. I have no problem taking $100 loss to let my trade breathe. Yeah. Again, I'm structuring my stop loss around what I assume to be a breakaway gap right in here. So if price comes back into this breakaway gap, then I'm going to be invalidated in my trade idea anyways, right? Yeah. So when I say an opportunity zone, I say every time we see a market reversal, requires, if you're my student, you're going to know this like the back of your hand because we say it so many times. It requires a higher time frame PD array, an SMT, and then a change in the state of delivery. So the inverse of this condition is a invalidation of reversal, which would mean if there is a higher time frame PD array that forms SMT, and then we trade through that SMT, we seek the next higher time frame PD array, right? It's the same logic. And for me, the next higher time frame PD array, well, it's on my chart. It's the external range high. Now, this is a high resistance liquidity run. You can see the market is accumulating, which is why I'm risking around $100 here, right? Like, look at my stop loss now. It's even like this is the trade. Let me grab a screenshot for you. I put on half size and I'm risking $57 trading the invalidation for roughly 3R. Right? So that's it. It's not an A plus setup. I know that. I recognize that. And I'm willing to take a risk, a very small risk, on trading that invalidation. That's it. Right? A very, very tight stop loss trade because I'm only willing to hold this trade if we expand through my invalidation. Look, only if we expand through my invalidation do I want to be in this trade. If we start to accumulate at my invalidation area, then we are not going to seek the next high in the trade time frame that I'm positioning myself. In this, for example, 15 or 30-minute candle, right? For example, if price comes back into this breakaway gap on the 5-minute, what's to stop it from coming into this fair value gap on the 30-minute chart? Nothing. There's nothing that stops that from happening, right? So we will either expand here or we will continue to accumulate and then maybe form a reversal out of a fair value gap, right? Let's say we do this. Then we price in a fair value gap. And then we form a primal reversal with a C2 SMT, right? That would be a valid continuation framework. I'm saying if this candle wants to expand, we're not going to come into here. We're going to continue to expand. Right? That's why my stop loss can be 4 points, because it's anything more than that. I don't believe any of these lows will hold. Is there SMT anywhere here? No. There's no SMT in this market, right? I don't see SMT here, and I no longer see SMT here. Do you see? There's no SMT at the highs, and there's no SMT at the lows. So what are we trading? We're trading inside of a range with no SMTs. So I'm trading the invalidation of an SMT as opposed to the validation of an expansion. Right? There's no SMTs on either side of the market. Okay, I'm gonna stop trying to explain. I hope you guys understand, and I'll do a full breakdown just like I did before with the FOMC trade. It was exactly the same. It was the same thing as FOMC day. Let's see what happens, right? I mean, we're looking for that range high. That's my only TP, 5695.75. It's an effective, right? So when we talk about effective risk, we have now made the effective risk of this trade much higher, right? So the effective risk is now, right, 300 divided by 50, which is a 6R trade, right? So the original risk was 2R when we positioned ourselves. So we positioned ourselves at a 2R multiple of risk. And now that we've seen a confirmation of order flow, we've moved our risk dynamically to make it an effective risk that's much higher. 7R, right? Yeah, limits are set for me too. I won't touch this trade whatsoever now, right? I have a really good invalidation of order flow, and I have a very, very strong draw on liquidity in the form of the only other higher time frame PD array I see on my chart. I am not considering this hourly gap to be significant. And the reason for that is because we formed a divergence in here already, and then we have invalidated the divergence that formed inside of here. So for me, the internal range of liquidity yielded an external range low, and we went from internal to external. I don't anticipate that the internal range of liquidity will once again provide resistance. So I'm not considering this to be a reversal area. I'm considering this to just be a irrelevant Afyz. Like, that's how I'm framing it in my analysis. I don't really care about this fair value gap. I'm gonna grab some water, guys. I'll be back in like 2 minutes. My dog Mango is asleep in his crate on all fours. So funny. I'm gonna go take a picture so I can show you guys. I'm sending you guys a picture so we can watch something while we wait for our trade to do anything. Where is it? Oh, sorry, I connected on my phone. My bad, guys. Let me share my screen again. Where's the picture of Mango to send it to? There we go. See how my dog is sleeping right now? He is just absolutely chilling, eh? He doesn't got a care in the world, actually. That's how I'm trying to be while I'm trading. I'm trying to emulate Mango's like attitude. Yeah, when your trade is risk free, literally. that's the mood. That's after like TP1 hits and you stop loss break even. You're like, whatever happens, happens. That's the mood you feel. Okay, guys, we are really not doing much here. There's nothing really to point out on this chart, right? We have an accumulation. We had a 15-minute change in state actually, which is nice. So we can see our 50-minute candle and our 30-minute candle closed quite nicely. It looks good. I really like our stop loss. Again, like I said, any deep retracements here don't support expansion. So, is that a golden retriever as well, Oliver? Why do all why do all Goldens have like the same mannerisms? Have you noticed that? He's so cute. How old is he? The cute pup for sure. 3.5. Oh, Mango's just about to turn 2, May 9th. And he's still a baby. He acts like a baby too. When do they calm down, Oliver? Like I've heard like 5 years maybe. Like yeah, he has a lot of energy. Some people tell me like 5 years is the time where they kind of calm down a bit. Mine did at 4. Okay, I'll miss it. I'll definitely miss his crazy energy. It's just a lot sometimes. Like sometimes when I'm frustrated with trading and then my dog just goes ballistic, I'm just like, oh, I can't wait till he calms down. Then other times I'm like, I need this. I need some craziness. Right? I think Dom went largely break even today. Yeah. Oh, actually, Dom made like $100. I think. You can see in his channel he took some shorts. Yeah. Today's just a range day. Like, I really like the trade we're in. I just want to see it go. Like, if we just continue to consolidate here and we do not expand into 11 a.m., I think I'll just get stopped out because the market's not expanding towards the draw. But I think this is the best trade I could be in, all things considered. I don't like the reversal down here because I don't have the invalidation, and I don't like the shorts here actually either because we're so close to that invalidation. So. Let's invite Dom up. I need someone to talk to. Come up here, Dom. There you go. I can't hear you. Yo, what's up?
Nothing.
Yeah, what'd you take? What'd you end up taking? The shorts at like 10-ish?
I'm still looking for shorts, to be honest.
You don't think we're gonna take that range high?
I don't think so. I think because what I'm looking, right? We are now at the daily open of the daily candle,
Yes.
right?
Yes.
And usually when we have this massive wick,
Mhm.
daily open is our kind of like objective for the session.
Yep.
So I think we fulfilled our session, and right now I'm looking kind of at like 15M to 1M fractal to sell down, but I don't know if I'm gonna take it.
I could see it. Yeah, you're looking in this imbalance right here, right?
Yeah.
Yeah. I just don't buy it. I just don't buy that this move would not take out these highs as well. Fuck all of the shorts, man. Let's just rip it again for another day into NFP.
Yeah, it could easily. It easily could. If we flip down, like if we flip this, like below 575. I think I would have shorted it, to be honest. Like if we close 1 minute below 575, I wouldn't be long, for example, anymore.
On NASDAQ. Yeah.
Yeah.
Yeah. Yeah. Yeah. I think if we come back into my breakaway gap area, I think it could reverse.
Yeah.
I just think that they both sides of the market here look a bit shitty, to be completely honest. But I like the invalidation.
Today is, yeah.
The print today is
Market
disgusting.
is
The market print today is absolutely disgusting.
Let's see. Let's see.
Let's see this daily open. We'll keep that on our chart, actually. It's a very interesting key level.
Yeah, that's what I've been looking since we opened, like 10 a.m. Then my logic was, 10 a.m., 6 a.m. high, add the daily open. Okay, we can.
Yeah, but you got to admit, this 1030 candle is super bullish.
Yes.
Like, this candle is hard to short, isn't it?
I mean, to be honest, it's a bullish market, right? So shorting here is
it's kind of like it's just what I want. It's what I want to do, but I won't allow myself to take a short. I just can't short this 4-hour close. Unfortunately, under any circumstance, I can't short that close.
I agree.
It's just like yesterday, bro. I wanted to short, and then you see the where is this? You see this close, and you're like, well, I just can't short anymore. You know what I mean?
Yeah.
Absolutely. And even if it goes, you're like, well, it's gonna go without me. Then fuck. But Dom, does that logic of the trading the invalidation make sense to you? Because we don't have SMTs on either side of the market. I want to know if I did a good job of explaining that. We don't have SMT at the lows, and we've invalidated the only SMT of the daily high.
Yeah, it does make sense to me, because in all reality, like, market profile of today is not going to fit any model.
Yeah.
Whoever says, they made insane money today and their model hit, I mean,
it's not a model. They either bottom tick the lows or they bottom tick or they top tick the highs.
Exactly. So
yeah, I just want to make sure that like the explanation makes sense, because there is no SMT, so I'm just trading the invalidation of an SMT. That's it.
Yeah. I mean, that makes sense to me. I get it.
I mean, if we use SMT to get into trades, then we should use SMT to get out of trades and qualify the inverse of them, right? Just using the same exact logic on both sides, right?
Yeah. I was about to say, like, you have many people who are trading the invalidation. For example, IFVG, right?
Exactly. Yes. Yeah, or a breaker, right? A breaker is trading the invalidation of an order block.
Yeah.
So I guess maybe this is maybe I can just market this as like inverse SMT.
Don't let ICT seize it, He will.
What do you guys think of ISMT? ISMT. I'll spell it like this. There we go. Yo, new concept loading. ISMT. I'm gonna put that on my recap today. Look at this. Ready?
Looks good.
ISMT. You guys messing with the ISMTs? I am. I'm messing with them. Need an indicator for ISMT? No, but that's exactly what it is. That's the best way to word it, actually, is inverse SMT. But that sounds so stupid. I would never do that, but next viral model. It's the same logic. That's what I'm trying to say. The logic checks out. Yo, Dom, I'm surprised you didn't catch 6 a.m.'s open. That was like mint.
It's only because I wasn't at the desk. That's why I traded the 2 a.m. candle, and then 6 a.m. by the time I saw it, it was all like it already expanded so much, and I was like, okay.
For me, when I saw 6, dude, open into this order block, I was like, okay, so there's our order block, there's our SMT. They had accumulation into 6. I'm like, this is so mint, so prime, and then it just melted.
Yeah. No, I traded 2 a.m. candle, but I'm just trying, because what we talked like maybe some earlier streams. So I was like, okay, let me gather data for also London to see how it moves. That's why I was trailing it very aggressively. If it was New York trade, I would have just let it, run.
Yeah, guys, we're gonna get potentially Dom on some earlier streams, like 6 a.m.'s open, because he's in a time zone which is conducive to that trading. Now, even if you don't trade that, if you're up and you want to study the opens of the higher time frame candles, it's exactly the same thing as like my Primo model. It's just using 4-hour opens instead of 1-hour opens, right?
Yes. Yeah. So I got so many questions yesterday when I posted GXT and Primo. And I got like a guy, two guys wrote me on Twitter, one guy wrote me on Discord, and they're like, "Is GXT and Primo the same thing?" I'm like, "Yeah,
It's like pretty. We're all writing the same thing, bro. It's all the fractal model. Like the fractal model originated from the MXM Trader course, right? Like we learned that market maker models are swing points, and then T did a really good job of naming the candles C2, C3, C4, right?
Yes.
And then all the models that everyone trades emerge from that logic. GXT is just using 4-hour opens with what I believe to be protraction profiling, and then
it is.
Yeah, and then Primo is just using 8, 9, 10 as a condition, right? Just to again, just like model one session, right?
Yeah.
Here's profiling.
Well, GXT just uses 6 and 10, and what people often like. It's kind of misconception. People think that GXT just trades PO3 or 4-hour candle, and that's not true. Where it comes very similar to Primo is because you are trying to frame high or low of the day and trade 4-hour candle away from it, which is also
you're aligning your expansion candles. That's the best way to do it. Yeah, 4-hour with the 1 hour. And the nice thing is when we talk about protraction profiling, that just tells us if the H1 candles in New York, which are 8, 9, or 10, are going to align with the 6 a.m. expansion phase or not. That's all protraction profiling is are we going to expand a 6 a.m. in that 6 a.m. 4-hour candle? It's just a more nuanced way of saying that, right? You're looking at more specific conditions.
Yes. Yeah.
The fractal model is the MXM next day model. Not true. The fractal model is trading C3 actually. The MXM next day model is trading C4. Yep. Again, the best image I can refer to you for this logic is this. This was in my Primo model lectures. This, right? I trade the reversal candle, C2. The fractal model is essentially always trading a continuation, C3. And the next day model, which MXM Trader taught like 5 years ago, is trading the established swing point, silver bullet, C4. Right? It's all similar. Like again, like very, very similar trading models across the board. But like you got to give credit where it's due. MXM Trader and T Trades really kind of conceptualized C2, C3, C4, the naming structure, right? And the concepts came from market maker models, right? And then the entry techniques are from ICT. So then it all comes together.
Hi, Raz.
We took an entry, Pierre, on ES. Down here. We are in this trade. I mean, this would be the effective R of this trade will be absolutely nuts.
This is also like
if this hits, we use dynamic risk well in terms of adjusting our stop loss. Right? I'm not gonna call this a 7-hour trade, guys. I will never gaslight you guys into thinking this is a 7-hour trade. It's not. This is a 2-hour trade that we made a 7-hour trade by manipulating risk. Imagine I go on Twitter, Dom. I'm like 8R ES today.
Yeah, like, people are gonna be
bullshit artist, just a straight bullshit artist. Like, no. This is a 2-hour trade that eventually I was like, I don't want it if it's not gonna be an 8-hour trade. You know what I mean? Yeah.
Yeah, that would be an ultimate grift.
Yeah, guys, when I post my recap today, please glaze me. Be like 8R secured live. No one does it like him. For some reason, I just think that's so funny. If I try and make it seem like that, it's not, guys. It was a 2-hour trade. I will label it as a 2-hour trade. And they'll call it Enigma. We'll go. Here's the caption. We'll go. My next YouTube video, guys. We'll go. ISMT 8R secured. Enigma. There we go. That's the next YouTube caption. ISMT. Goddamn, that's hilarious. How I made 100K trading ISMT
video.
Dom, it's how I made 100K trading ISMTs.
Yes, that's a proper YouTube, video.
Dude, that's how I get engagement farm the shit out of my socials.
Yes.
Fuck the value. It's just how I made $1 million trading ISMTs, and you can too.
Let me show you.
Let me show you. Yeah, I'm actually gonna label it an ISMT today, guys, just for the meme. You guys better comment on my Twitter post memeing ISMTs. It's gonna be so funny. No, but all jokes aside, this was more of a discretionary trade, right? So
yeah,
don't feel upset if the logic didn't make sense, because there wasn't a great model framework today, but there was something I was comfortable putting risk on, and that's the differentiating factor. It wasn't that I was trading without logic. It's just I didn't have a model to call it. I just was trading a continuation signature and an invalidation. Had the hammer.
I actually wanted to add one thing to that, guys. I wanted to type it earlier, but I was just busy looking at the charts. It's also, when you are kind of on a brink of profitability or unprofitable, it's always better to just follow your model.
Mm-hmm.
But then as the time goes on and you get more profitable and you have more buffer and you're really in tune with the market, then it's okay to add a little bit of discretionary stuff.
Like, guys, I hope you can see I do this every single day in front of you, and 90% of times we're going to be as structured and formulaic as possible, but I would be lying if I told you I didn't use discretion, right? And I'm not going to lie to you. I'm not also going to like take a position and be like, well, it's just cuz. I'm going to try and explain it to you, right? But that explanation is going to involve discretion in some cases, and that is just the reality of trading. I'm sorry, right?
Yeah.
Like, Dom, do you know a single profitable trader who doesn't use discretion?
No, it's impossible.
No. If you're trading the charts and you're drawing lines and boxes on your charts, sorry to break it to you, you are discretionary trading. Right? I'm gonna break even my stop here, guys. Stops at break even. We're 80% on the way to TP. And again, I don't want to sit through a high resistance liquidity run.
Yeah, this 11 a.m. open is
yeah. Again, right?
Fast down, fast up.
Yeah. If it comes back in below this candle here, it's gotta be quick down, quick up, right? Yeah, I don't want to see a deep retracement. All I see is low resistance liquidity right here. So yeah, it's got to go quick for me. How much R am I up on the year so far? That's a really good question. Should I check? I would tell you on the month, I'm probably up around 27 or 28 R last month. February, I was more or less break even. January, I was up probably only like 5 or 6 R because I was more or less break even. And then December, I didn't trade too much. So I'm probably up like 28 to 30 R in the year. That makes sense. I'll check after. I'll go into my TradeZilla and I'll check. Is there a way to check R multiples in TradeZilla, Dom? Because I don't have it synced to like auto import an R. Do you?
Yeah, I think you can select like
your risk.
But it's not correct actually. I just
remember. It'll be tougher to tell you how much R I'm up, but I know that if you look at just March, I was up like 28 R. Yeah, I had a really good March. Really, really good March.
Yeah, exactly. You need to add stop loss and target.
Yeah. You have to add your SL and TP, right? Yeah, I forgot about that. Yeah. So yeah, I won't be able to tell you the exact R, but if you look at like, I mean, if you go and just look at my recaps, you'll be able to kind of reverse engineer it. I posted every single trade I've taken pretty much in all of the last
month. Yeah. Yeah, Aaron, if it's one account, it's gonna just sync everything. Yes.
But we're doing fantastic. This is a really, really good start to the year, is what I'll say. Much better than I anticipated for March. Like, January, February was kind of underperformance actually for me, to be completely honest. But March was just a gross overperformance, I could say.
Yeah, but I mean, every model has that. So
yeah, exactly. Yeah, exactly. Every model has periods where you just grossly overperform too. So
it's super funny to me because like yesterday I got like some texts on Twitter. People were like, "Oh, you only post wins, like you didn't post any losses." I'm like, "Bro, where were you? Like for first 2 weeks of February."
Tell me that all the time. I'm like, brother, I lost for a full month straight. Like,
What are you talking about?
What are you talking about? Like all of February, I don't know. A lot of the people in Discord, you'll notice, like you'll see like how fickle Discord is. People, you won't like if you have a losing month, everyone will leave. So they don't see that. But I'm like the same people who are like you only post wins. I'm like, brother, in February I went straight break even.
Yeah.
Like I was out here every single day in February. I don't know who was here in February. Like the norms. Like Mr. Bala, Eli, Sam, Johnny. You guys know I went fucking break even as fuck in February. Like every other day was win loss win loss win loss, right? So yeah, I love it. I love when people flame me for only posting wins. I'm like, you have no idea.
No. It's,
I'm like,
so
I
fun.
take every single trade live, and I was sitting here for a month straight losing with my Discord. Like we're not losing, but just breaking even on the month, right? My model had a break even month. Yeah, when people like you know what the worst thing is, Dom, is when people go and they're like, I want a refund because you lost this month. I'm like, bro, like would you rather me just take really shitty trades that are guaranteed to win? Like I could do that too. You know what I could do is I could find like every 1 minute impulse candle and just go like this and risk like 0.5 R. I could risk like this and I could just trade like that, guys. I could do that and then I'd have a great win rate, but this is not fucking trading, is it?
No.
Like, no, like I have no problem showing you guys losses, by the way. I don't care if we lose. I don't care if you're here to just take winning signals. I'm here so that you can eventually fucking learn, right? Would you say that Primal model does have some kind of seasonal tendency? All models have seasonal tendency. Yes, I would definitely say that. I think most ICT models have the same seasonal tendency. Would you agree, Dom?
Yeah, I think so too. That's at least what
I
I
think
see on Twitter. You can really see it for guys. I know Afyz, but like when there's a good day, you will just see wins everywhere. Full Twitter is full of wins, and then on like day like today, I mean, I'm not gonna expect like from reputable guys to post some wins. I was watching, for example, Kane on the Ninja stream. He took 2 losses. Like he tried to short twice. He took 2 losses, which is I mean, it's normal, right? Losses come.
I would say that generally speaking, seasonal tendency is something that all ICT traders have in their models because the way we trade is based on closures of candles, and the first quarter generally offers the most consolidation of that candle, right? So the most range bound conditions of market. I don't know. You guys will see. Like the reality is, social media is so fickle. Like I hate it for that reason. People will love you when you're winning and hate you when you're losing. And the reality is, like, if you buy into any of those narratives, you won't be profitable, right? You just gotta show up every day and just trade your model, right? Like you just gotta do the right things every day and forget about kind of the expectancy of a single month. Dude, this is so choppy.
There's this good saying. It's very cheesy, but people tend to underestimate what they can do in a long run and overestimate what they can do in short run. Right? So,
yeah, you're wildly capable over months, and you're just a number, just a data point over days or weeks. You know what I mean? Like what you can achieve over months and years is out of this world, but what you think you can achieve in days is probably never going to happen.
Yeah,
you just gotta keep going. Yeah, guys, I'm break even for sure here. If you're not break even already, look at the way we're delivering higher. Any points in time, I'm expecting this. I'm expecting a massive FU can. I don't know about you, Dom, but this looks like
I think it's gonna go.
This looks so bad. This is not expansion, by the way. This is what we call like spooling, where it's really, really tight. Ugh, disgusting.
Market probably just waits for Trump to announce.
Yeah, market probably comes into here, comes all the way down, and then goes. Yeah, this is really ugly. How long have we been in this trade for? What time do we enter at? 10:18? Yeah, 10:15 to 11. Almost an hour in this chop. Let's see what happens. You know what I like, though, about trades that last this long? Do you guys really feel any emotional ways anymore about this trade? Not really, right? Like, we've been in... Do you guys have that? Like, after a certain period of time, we're just like, yo, just like, this trade, we've been in it for so long, right? Something's gonna happen. It's either gonna stop us out or give us TP. I just want to get off the charts. For me, for a certain time, I'm just like, I just want to get off the charts, right? Just take me out of my misery one way or another. I think that's why I'd be a bad swing trader. I don't know about you, Dom. Could you ever swing trade?
Only with options, I think.
Yeah, options I could. Futures, I just feel like I cannot sit through a month of price action watching this. Since I'm break even, I don't care. Yeah, me too, honestly. I'm really like I wasn't expecting great risk out of this trade. I had a super tight stop of like 10 points down to 4 points. Now I'm at 0 points. If I make a couple $100, great. If I lose nothing, great. Like this is not a high probability day, right? Do you see how unintuitive this price action is? Look how choppy it is down. If you get a good entry, you're fine. But then this is like pretty much not tradable. Untradable in here, and then we find a tradable piece. We have to just wait for it now. Did anyone feel FOMO in these candles? Because if you did, I want you to journal. There's nothing you can do here, right? Like, is there any entry technique here, Dom?
Absolutely not.
This is just like hope and pray your 1 minute entry expands. That's all it is, right? Like, if you feel FOMO on these candles, just remember there's literally nothing in here for you. And although this looks uglier, there was something in there for us, right? Get our long equities open. Did you use the RTY SMT? Let me check. Oh yeah, he took 2R. Yeah, he just scalped it. He just scalped the open. Okay. Look. He said he couldn't hold this trade even if he wanted to. Okay, so Garrett just pretty much just fucking. I'm gonna make fun. I'm gonna DM him and make fun of him for saying this. He's like, I couldn't hold this trade if I wanted to. Yeah. I mean, you can see into 930. What we even said the same thing, right? We said 930 is probably likely to run that 30-minute low and then rip back into the range, right?
Yeah.
But there's no model there for us, guys. It's yeah, you could take a 2R scalp. It's just you know what the model is for that trade? It's what's the model? It's risk management, right? Like this is the model. This is a good trade based on risk management. Wait for this low to be swept. Risk like previous day low and target 2R, right? Like that's this model here is just called risk management, right? It's a good risk to reward trade, isn't it? You're gonna say before we take previous day low, we're gonna come back into the range. That's your logic. That's it. Would I ever take that? Of course not. It's not something I would take.
Yeah, exactly. And it's also not part of his model, right? So it was only like again discretionary.
Yeah, exactly. It's discretionary. Now, don't get me wrong. Sometimes you feel it in your balls. Like sometimes you're like, man, this is gonna go higher, right? You guys have all had that feeling, haven't you? Like, oh, it just looks so good, right? But again, I try and refrain from entering on the oh, it looks so good trades and just say I need something to get involved. You know, some of the most profitable retail traders of all time have been some of the most discretionary traders, though. They just use good risk management. That's it.
I mean, to be honest, like risk management is all there is. It's the enigma, like nothing else.
Risk management is the strategy. Yeah. Like here, the fact that we leveraged and we manipulated risk. So what we can say today is that we really manipulated risk. The fact that we manipulated risk means this is a really good trade. Even though the structure is pretty bad, the risk that we used is really strong, and then our invalidation being manipulated makes it an even stronger trade for us. So now the worst case scenario is we break even, and the best case scenario is we realize an effective 8R trade, right, or a 2R original trade. So we just manipulate our risk today very, very strategically. Now, is it better to always do this? No. In fact, most times I don't manipulate my risk very much because I have a lot of conviction in my market structure. Today, I don't buy any of it. But I still think there's opportunity using manipulated risk to get involved. I'm gonna go pee, I'll be right back.
What's up, guys? Who has any questions? I think this will sell down, to be honest. Yeah, so it was essentially just a 10 a.m. continuation. That's like in a quick nutshell.
Big down close candles incoming. What's going on?
Yeah. I still think it's gonna sell off, to be honest.
I
Now
still
we
think
are
so too, actually. I agree. This looks terrible. This delivery is so bad.
Yeah, we are closing now again below daily open. So
On NAS, yeah. Let me mark out daily open on NAS as well, guys. I only have it on ES. I think ES is the strong. I'm glad we're in ES longs. That's what I'll say.
Yeah, that's pretty good. Yeah.
But I don't buy it, guys. I'm expecting to get break even on this trade, to be completely honest with you, because this structure is just delivering so slowly. Daily open. Yeah, we're back below it on NASDAQ again too. Yep.
Yeah.
Yep. Anyways, our stop loss is break even. So our stop loss is right here. If you guys want to like know where it is on the chart, it's literally right here. We will not lose this trade, not lose any money today. We won't make any money. We won't lose any.
Maybe Afyz, you want to explain why we were in the longs?
Yeah, we were in the longs because the only SMT that formed today, Dusty. Let me get rid of this indicator to show you. The only SMT that we formed today on this daily candle was right here. So the minute price invalidates this SMT divergence with NASDAQ trading above these highs, I now look to trade the invalidation and target the next pool of liquidity. The next pool of liquidity is this external range high. So I use a 3-minute entry function with the invalidation. So the invalidation SMT is right in this closure here on NASDAQ at 10 a.m. So I wait for a retracement, an inversion, and I long the inversion right here. And I say, okay, so if we're not going to reverse from that SMT, I want to be targeting the next pool of liquidity in the market. And the next pool of liquidity in the market is up here. So I take that as the invalidation. And then I put my stop loss at the breakaway gap once it formed on the 5-minute chart. And now my stop loss is at break even because we've expanded, but we have not reached our draw. And this is not the type of move I want to keep a full stop loss on because this is low resistance liquidity, right? Trendline liquidity. Yeah, so the framework, Ryan, is we form SMT on the hourly chart. We invalidate the SMT. So I'm looking to trade to the next pool of liquidity. Next pool of liquidity. So I look to frame a trade to that next pool of liquidity. Okay, we're about 8 points away from my stop. Again, we're break even, right? So we're chilling. Let me keep my actual exact break even on my chart, though. It's right here. Let's put a big fat line that says stop loss break even. There we go. Yeah. The high day framework was invalidated. Yep, exactly. Yep. So this is the external range high is the invalidation draw. Right? We talked about this in our last one-on-one too, Dusty, me and you, right? I believe it was me and you. We talked about literally that FOMC trade. Same idea, right? The invalidation draw. Yeah. It's just saying if you're not going to reverse it this high, then where's the next place you can reverse? Probably that high. But I think we're going to go lower too if NASDAQ continues to close below daily open. This is a really sensitive spot, eh? See the accumulation here, though?
Yeah.
Come on, give me the range high on ES, bro. Come on. I need it so I can do a trade recap and use the word ISMT, bro. Or else I'm cooked. It's nowhere near as fun to say ISMT break even trade. No one wants to hear that, bro.
No.
No one wants that. No one in the chat wants that. No one wants me to go ISMT break even. No, they want me to say ISMT 10R how I made $1 million.
Exactly. I also want to know how you made $1 million.
Exactly. You hear that, market? Give us the pump. But this is one of those days that if I wasn't on stream, I would have set and forget and just completely dipped.
Yeah.
There's no way I'm watching this. This is like heinous. Nice support at the daily open actually from NASDAQ. You can see we're consolidating at it, which is actually pretty bullish when you consider the fact that we had a higher time frame bullish close, right?
Yeah.
Look at the close here. This is a pretty bullish indication, actually, to be honest. Because this is our consolidation of Asia above the daily open now. Pretty bullish. I wouldn't short it yet. I definitely wouldn't take another long, though. I like our entry for longs. That's it. Like, I would not long this change and stay. Would you, Dom?
Long or short?
Would you long this SISD right here to the external range high with this SMT that forms?
Yeah, I would long it more than short it for sure.
Yeah, I wouldn't even long. What I'm saying is I wouldn't even long this because I don't like the risk.
Yeah, and it's too tight.
Look at the risk. It's 0.8 R. Yeah, it's dog shit.
Yeah. No, but definitely, like, if I had to take a position, I would rather long it than short it, for sure.
100%.
Yeah.
Notice how Dom's saying if he had to, but he's not going to, because no one's forcing him to trade. It's the beauty of trading. You don't have to trade. But I think, again, our entry down here is phenomenal. Like, I like it, because it's a really good risk.
Yeah.
But the trade today was really a trade of risk management as opposed to structure, in my opinion. It's like, if we're going to go higher, you don't want to get involved any higher. You know what I mean? It's got to be here. All right, let's go. Sometimes when I yap, it knows I'm yapping and it goes.
The yapping secrets.
Don't you know? Pump it up. Yeah, do we have a soundboard in here? No, you guys. We have a soundboard in the mentorship group chat. It's in the mentorship VC. It's so funny. We have the IC fucking T. Have you guys heard that? I'm gonna try and find it for you guys. Guys, go look at this. Go look at this. It's so funny. We have this in the soundboard.
It's the IC fucking T.
Such a memeable fucking face too from ICT. Oh, nice. Really, really nice close here. Okay. We should hit our draw. I'm going to trail my stop loss below that low, guys, to secure even more profits. Stop loss is going here. Nice.
Now it's going.
Yeah. Now let's go. If it doesn't go now, I'd be extremely surprised. If we leave a failure swing here now, I'd be extremely surprised. That closure is very, very bullish. Maybe I shouldn't jinx it, guys. Maybe I'll just fuck off and stop talking. That's my TP noise now. Every morning, let's set that as our alarm. Well, hello there, guys. I see fucking T.
Did you see the April Fools yesterday on Twitter?
No, I don't spend much time on Twitter. What were people trolling?
Yeah, like all the props. I think Tradeify, My Funded Futures, they posted like, congrats to ICT for being the best trader, like, and the highest payout.
I saw that. That's so cool.
That's cruel.
I think My Funded Futures had a new promo going, guys, for expert plans. If you're like want to pick up something else, I will never grift you a code though. So use someone else's code. Don't ask me for a code. I fucking hate prop firms. The day I sell out a prop firm code, guys, just shoot me in the head. Yeah. Remember, prop firms are the enemy. I'll never grift you a prop firm affiliate. Code Afyz got a ring to it. Dom, you want to start grifting codes? I'll let you.
Oh no, never.
Never. I trust me. I really like my friends in this space, but the ones who give codes, I'm always like, bro, prop firms are the fucking enemy. We don't want to give them any business. We have to give them business, unfortunately, because we're good traders, but we don't want people to buy the challenges.
No, absolutely. That's
Yeah.
I'm getting banned by my funded futures, by the way.
You are?
Yeah. They
Like
want to take me live, but I don't want it. So now I'm kind of.
So now you gotta go to Top Step. Or Apex.
I already am. I already am trading with them, but yeah, they're just kind of very scammy, to be honest. My funded futures, the way they want to do it. So
honestly, you know what's funny to say? These days, Apex seems the best. Isn't that funny? Like of all the prop firms, these days Apex has the least problems. Eh? They'll pay you well, then they'll ban you. You know what I mean?
Yeah, that's this because they want to take your money. They want to deposit into live account, like the money that you made trading. Just what they're called, like PA accounts, and they want to aggregate those. Like, for example, with my funded futures from 3 accounts, they take and they want to put it into live account that you cannot withdraw out, and then you need to pay for the live data.
Yeah, I know. That's why I like Apex, dude. That's why I tell people Apex sucks sometimes, but they never do that shit. Apex will never A-book me, you know what I mean?
Yes, yeah.
They might eventually, guys, this year I'm gonna get a 7-figure payout from Apex. I'm telling you right now. It's gonna happen. And they're going to ban me after it, but they're gonna pay me out my 7-figure payout first, right? And then I'm gonna put it all into a personal account. And the next time you see me trading outside of this year is gonna be on a personal account. $3 million. I already have a pretty decent sized personal account, but I'm gonna be adding my Apex payout to it. And once I get that 7-figure payout, I'm gonna be the only trader who would trade every trade for that payout live on stream. Isn't that crazy, Dom? Nice TP hit. Call it a day, boys and girls. Easy TP. I'm joking. That wasn't easy at all. All right, nice trade. I'll do a full recap after. That was hard to trade, but yeah. The one that you guys should get excited about is that this year I'm going to get a 7-figure payout, and I'm not going to take a single trade off stream for that 7-figure payout. So you're going to see exactly what transparency means. New definition to that word. All right, cool. Great trade today. We had to hold for a bit, but sometimes that's the way she goes. I'll see you guys tomorrow. We have news tomorrow, right, Dom?
Yes, we should have some. What is tomorrow? Unemployment.
ISM. Yeah, ISM. Yeah, PMI at 10. Okay, so unemployment at 8:30. We're not going to trade that. We'll trade PMI at 10. And then tomorrow's NFP protocol as well. So we do 0.5 risk, everyone. So add it to your notes that tomorrow, no matter how good the setup is, you're going to size half your risk. I'm pretty sure Dom might even size less than half his risk. What do you usually size pre-NFP?
Usually 0.5%, but tomorrow maybe 0.3. I don't know. It's like too many things going on. So
yeah. Tomorrow, guys, everyone should do 0.5 risk for tomorrow. Okay, cool. I'll do a full recap. Hopefully it made sense. I would love to see this, guys, by the way, just absolutely face rip into NFP. Because there's so many people who have shorted this market. Think about everyone who's shorted this market right now. What's the max pain for the market?
21K.
Dude, it's this high right here. For me, this is the max pain. Oh yeah, you said it, 21K? Yeah. Or even 20,200. Like this here would be an absolute fuck you to everyone who shorted early. So my eye is always thinking about where would that massive FU be. You're right, it's up here. So keep this level on your charts, guys, is like the FU level. This is like the FU level for all of the early shorts for this move, right? Okay, cool. I will do a full trade recap and I will see you guys tomorrow. Have a good one. Peace. Thanks, Dom. Bye.
Bye, guys.